Hello everyone, and welcome back to our channel. Imagine a world where traditional economic powerhouses are overtaken by dynamic new players on the global stage. By 2030, Indonesia is projected to become the fifth largest economy in the world, surpassing established economies like Russia and many in Europe. Today, we're diving into how this Southeast Asian nation is achieving such remarkable growth and why it should be on every savvy investor's radar as a key destination to safeguard against financial repression. From its strategic position along vital global shipping routes to its burgeoning sectors like digital economy and renewable energy, Indonesia is not just growing, it's thriving. And with this growth comes immense opportunities for investors looking to diversify away from economically repressive environments. Stick with us as we explore why Indonesia stands out in the international arena and how you can potentially benefit from its rise. If you want to understand more about financial repression and why it's crucial to look for opportunities like those in Indonesia, make sure to check out our previous video linked below. Financial repression refers to a range of strategies used by governments to channel funds to themselves, often at the expense of savers and investors as a form of debt reduction. This can include measures like keeping interest rates artificially low, enforcing high reserve requirements, or directly controlling significant parts of the banking sector. These policies can erode investment returns and diminish the purchasing power of your savings over time. In places like the UK and EU, we're seeing increasing signs of these measures as governments struggle with high levels of debt. This makes it critical for investors to seek out alternative markets where their capital can not only grow but also escape the grip of financial repression. And that brings us back to Indonesia. With its vibrant economy, strategic reforms, and low debt-to-GDP ratio, Indonesia represents a compelling contrast to the financially repressive climates found in many Western economies. Let's explore how Indonesia is not just avoiding these pitfalls, but actually capitalizing on its unique position to attract global investment. Indonesia is Southeast Asia's largest economy and boasts the world's fourth largest population, estimated to be at 279 million. The population is young and relatively well-educated, which fuels domestic consumption and provides a robust labor pool. Indonesia is an archipelago of islands which sits strategically in the maritime routes and also blessed with abundant natural resources. The country's GDP has shown a steady upward trajectory and currently stands at $1.1 trillion. It is projected to grow at an annual rate of about 5% and reach $5.9 trillion in 2030, at which time it will be the fifth largest economy, eclipsing Russia and many European countries. Therein lies the importance of Indonesia, as it is not widely known how much of a role it will play in the coming years in terms of geopolitics. This we will discuss later in this video. Indonesia's main problem and asset is its geography. Because the islands are spread over a vast area, economic development has been patchy. However, the current government led by Joko Widodo has made economic development and infrastructure development as key priorities. Under his tenure, several key infrastructure projects were completed, including the building of several airports and ports and a high-speed rail project from Jakarta to Bandung and building of an entirely new capital city called Nusantara. Indonesia has made enormous gains in poverty reduction, cutting poverty rates by half in the last 25 years. The per capita GDP stands at about $4,000, making Indonesia a middle-income country. Growing sectors. Digital economy. Rapid digital transformation is underway, driven by a tech-savvy population and increasing internet penetration. In 2021, the value of Indonesia's digital economy is recorded at $70 billion, and this is the highest in ASEAN. This number is estimated to be able to grow almost 5 times by 2030 with a value of $330 billion. E-commerce transactions give the biggest contribution to Indonesia's digital economy, where in 2021 the value reached $53 billion. This number is predicted to increase to $104 billion in 2025, with a growth rate of 18%, Despite being impacted by the pandemic, tourism is one of the fastest-growing economic sectors in recent decades. In addition, digital platforms have provided global access to consumers and facilitate service providers to increase the capacity and competitiveness of the tourism and trade sectors. Renewable energy. With its vast natural resources, Indonesia is focusing on renewable energy development. This sector is ripe for investments, given the global shift towards sustainable energy sources. Indonesia is one of the world's biggest nickel producers and has ambitious plans to be an EV manufacturing hub. It has attracted several investments from China and South Korea for battery manufacturing and is actively pursuing investment from Tesla. Infrastructure. Ongoing and planned projects in transport and utilities underpin long-term growth prospects and present numerous opportunities for infrastructure investments. The government plans to invest about 420 trillion Indonesian rupiah in 2024 on infrastructure projects. Resource wealth. Indonesia's economy is characterized by its rich natural resources. In particular, Indonesia is a major producer of nickel, palm oil, copper, coal, tin, and bauxite. In recent years, the government has clamped down on exports of several key commodities to encourage investment in locally based processing facilities and thus move up the value chain. Diverse economic makeup. In addition to mining, Indonesia's agricultural sector is also large, accounting for about 12% of GDP in 2022 and a much larger share of the workforce. Indonesia also has a growing industrial base, which, in addition to commodity processing, includes textiles and chemicals. The services sector is a large contributor to Indonesia's economy, but is still a notably smaller share of GDP than in developed nations, reflecting Indonesia's status as an emerging economy. Indonesia, unlike other ASEAN economies, is not export-oriented and so not dependent too much on exporting goods to the West. Major exports of Indonesia include essential oils, coal, palm oil, gold, and ferronickel. The major trading partners are China, USA, Japan, India, and other ASEAN countries. Trade between China and Indonesia has increased at an annual rate of 15% and currently stands at $130 billion. China has also made significant investments in Indonesia and is helping with many infrastructure projects like the high-speed railway and building of the new capital city Nusantara. Indonesia's strategic geographical positioning at the crossroads of crucial maritime routes has rendered it a focal point in the geopolitical rivalry between China and the United States. Both nations are actively seeking to expand their influence in Southeast Asia through significant investments in Indonesia. Historically adhering to a policy of non-alignment, Indonesia continues to navigate a careful diplomatic path, aiming to leverage its pivotal position to attract balanced investments from both global powers. This approach not only affirms Indonesia's commitment to maintaining its sovereignty and diplomatic autonomy, but also underscores its strategic intent to foster economic growth through diversified international partnerships. Indonesia will also benefit from China-ASEAN Free Trade Agreements. In 2010, the ASEAN-China Free Trade Area became the largest free trade area in terms of population and third largest in terms of nominal GDP. It was also the third largest trade volume after the European Economic Area and the North American Free Trade Area. In the future, as these economies grow at rate faster than European Economic Area, it will become much larger than the European Economic Area. The demographic profile shows a wide base and narrow top, and this means that consumption and economic productivity will be high for many years to come. Indonesia has managed its economy very well, and the government's debt to GDP stands at 40%. With the economy growing constantly at about 5% per annum and with strategic resources like nickel and cobalt, the outlook is bright for Indonesia in the foreseeable future. It also has a current account trade surplus, which is very good. This suggests that the chances of the government embarking on financial repression is low. If we look at the Indonesian rupiah, it has fallen quite a bit, even though the yields are higher. This dynamics will change over the next 10 years as Asia eclipses the West in terms of economic output, and the control of money will shift from the West to the East. In our mind, we think that the current low rate is something to take advantage of. Investing in Indonesia is currently not very easy. Foreign citizens cannot own land on their own. Also, foreign citizens cannot get a local stockbroking account to buy Indonesian companies. So the best way to invest in Indonesia is through an ETF. The iShares MSCI Indonesia ETF listed in NYSE is the largest traded ETF with the biggest assets under management. In the past 10 years, this ETF has ranged between $15 to $30. It is currently at around $20. The Vanguard FTSE Developed Asia Pacific excluding Japan UCITS ETF distributing has 823 million assets under management and will give exposure to the whole ASEAN economies. Although we don't have country-specific exposure, it gives wider diversification and reduces country-specific risks. Hey guys, we hope you liked this video. Please do like, share, and comment on this video. Thank you.